Hello everybody, welcome to Options Trading Hub. We are going to be going over some basic things today that I want you to pay attention to. I want you to set up your platform like this. You're going to be choosing whether the colors or other lines, however you want to, but at least you need to be able to understand why we are using these lines, and we're going to be going over them. First video right here, we're going to be going over the basics here. So let's zoom in a little bit so we can walk away from all that noise. The first thing we're going to do here, I'm using Thinkorswim, a platform from TD Ameritrade. You can use Webull as well, or other platforms that you choose to use. But the basics here are going to be that we are going to set up these lines right here, and we're going to go over each one of them. The first line is going to be the moving average exponential, or exponential moving average, and we're going to set that at 20. The 20 is going to be the style is going to be dashed, and the color is going to be red. Now, you can use whichever color you want to, or any style you want to, as long as you know which line is which. The reason why I change it is because I also have a red line back here that is also a different moving average, and I do not want to be confused. So let's go over the next line is going to be the 40 moving average exponential. This is going to be set up at 40, and you're not going to touch anything else. The only thing you're going to change is the length. So you're going to go in here, punch in 40, you change the color, green, style dash, and you're going to click OK or apply, and then click OK. And then we're also going to set up this line right here, which is the 50 moving average. The 50 is going to be a simple, not an exponential. It's going to be a simple moving average, and it's going to be set up at 50. The length is going to be 50. The color I use is blue, and the line is going to be solid. Now the next line is going to be the 150 moving average, which is right here. The 150 I use a bright green color, and it's also going to be solid. Reason why I don't want to get confused with the 40. You can use different colors like I said, but this is purely up to you. Now the next line is going to be the 200 moving average, and that's going to be set up just like this, solid red 200 moving average at the length, and the rest you're going to leave the same. You're going to apply and then click OK. Then as you do that, you should have these lines pop up on your screen. And the reason why I want you to have these lines is because we are going to be going over the importance of these lines. This is, for me, this is going to be your first signal when you're seeing a change of direction. Like for example in here, just to briefly go over them, you're going to see that we have a 20 over the 40 and over the 50. This is a bullish momentum. Bullish momentum is going to be determined by the 20 being above the 40 and the 50, and you're going to be seeing as we pull away from these lines, it becomes more bullish. We come to retest of 20 and we pull up again. We retest. We always want to, the market tries to retest that line. As you can see here, it retested once, twice, and it is showing you that there is support on that line. So even though it pulled on back slightly, you can see that if we found support at the 40 once again, and this move was not done. In fact, if you were not on this position, this pullback gave you the opportunity to hop in on this bullish pattern. So just to go over some few basic things we're going to be going over later of why the MACD is important, why this crossover right here is important, how to set it up, where we do it, and all of that. We will be going over that in future videos, but for now I want you to focus on just the basics, which in this video is going to be the 20, the 40 exponential moving averages, in addition to simple moving averages including 50, 150, and 200. I hope this helps, and we will be going over the importance of these in future videos. But as you can see here, as long as the 20 remains above the 40 and the 50, the pattern remains to the upside. In this other case, as an example, when the market is closed, we crossed the 20, crossed the 50 first, and it crossed the 40, and it formulated a pullback. Now if we go to other days, just to quickly go over it, on the 20 days, you're going to see that obviously it's not going to be as you know, as clear as when we zoom in on the 5-day on the 5-minute charts intraday. But you're also going to see that there is the cross that I talk about. The cross happened here, and so as it crossed, it started getting away from each other. As it gets away from each other, it's telling you that the market is going to go up. As you start seeing this 20 pull away from the 40 and pull away from the 50, is telling us that the upside is still there. Now, if you exited here, I don't blame you. If you're gonna lock in some profits, you can. But just looking at the charts, this is telling you that we're going up higher. And sometimes we tend to exit our winners way too soon. So even if you exited here, I don't blame you for it, but there was still some upside to be taken. So we will be going over many other things, including Fibonacci, including when to enter, when to exit, why are we entering and exiting, which is the most important thing, and other things that we're going to be looking at, such as volume, very important, MACD, the crossing of these two lines right here, the blue and the white lines, and also the RSI. Is it important? Well, how come sometimes it's overbought and the market continues to push up? Well, we will be going over that in the next videos in the future. But for now, let me know how you feel about this video. Let me know if it's clear. Let me know if you have any questions, and we will go from there. And also let me know what other videos you would like to see. We can go over and start breaking down trading and how to simplify things for you in the future. All right, that's it for today. Thank you and have a great night.